if you haven't gotten into gold or gold miners yet, I think you're probably going to get an opportunity to do that. I would do it gradually.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
And we are back with another edition of the Daily Dots, the weekly show, which is after Chase and I do this segment. I'm going to do another segment, kind of like in honor of the old radio show, right? And this segment is titled "The Great Misconception." So after we're done here with Chase, don't chase away. There's some more. Anyway, Chase, interesting week in the markets. Why don't we start off giving us a rundown on how the index is finished up today?
Yep, at a new all-time high in the S&P, closed at up about 0.5%. Q's up 0.3, flat for small caps, up 0.37 for equal weight. Mag 7 up just over 1%. All world ex-US up about 0.5%. Dollar was flat. Let's see, oil pretty flat. Gas had a good day. Gold down 1.8, silver down 1.2, platinum doing some give back down 4.5, palladium held in, stayed flat. Very, very notably to me, maybe the most notable thing today is follow through from copper. Copper up another 1%, and now you're at $5.12. A lot of strength there. And then in yields, the 2-year was up 2 basis points, and the 10 was up 2 basis points as well. 30-year was up 3. So. And vol closed the week, front month vol at 18.85.
Gotcha. Yeah, so I mean, there you got. There's your weekly close at all-time highs on both indexes. Not the Dow, but as we've said before, that's just 30 stocks. That's not what you're looking at. NASDAQ and S&P both closed at new all-time highs. That's pretty bullish, Pretty bullish.
And if you look at a monthly chart, there was a level, let's see, that capped the S&P at the same level in November, December, January, February, right at that 60-44. So now it looks like decent chance we close a month above that. So it's a very good looking chart of the S&P right now.
Yeah. And there's always interesting things going on underneath the surface, but it is kind of when you look at the makeup of this new all-time high, though, it's kind of bizarre. Meaning, and I don't know the exact numbers on this. You may not know either. But from I looking at fundamental things, I don't really pay a whole lot of attention to this kind of stuff. But my understanding is that to break to new all-time highs, you have, if you look at the index as a whole, you have very few companies breaking to new all-time highs, considering that the index is.
Last I saw for S&P was like 22 names for making a new all-time high.
But the flip side is though, I don't think in the past that has been a very bearish sign. Like in the past, way back past, I don't think you can read that the same way as you have in the past. Meaning, thanks to the magic of passive indexing, you would almost always expect the top 20. I guarantee you the majority of those 22 names in the S&P 500 are in the top half of the index. And that's probably in the top quarter of the index. And that's kind of one of the features of passive indexing, right?
Yeah. And I mean, yes, it's mostly tech. Like tech's crushing it. If you look at how many tech companies are above, whether 50-day or whatever, it's fine. And industrials are fine. I mean, utilities are right at their high. Financials are right at their high. Like, sure, healthcare is terrible still. Biotech's bad. Energy is bad. But even staples are kind of right at their high. Materials not great. Obviously, home builders have been struggling. So yeah, it's not super broad based, but I mean, like you say, if if tech is most of the market and tech is kind of breaking out, then it's kind of like a who cares about the participation, honestly.
Yeah. Well, and the other thing I think too is that and as that market goes up and as those names get more and more expensive, again, I just think it provides yet more opportunities to kind of level out your portfolio, right? Meaning to continue to, again, not fire sale, not dump, not saying it that, but to get more of a traditionally diversified approach. And it sounds funny to say this because it's been a little bit different in the last 15 years because there's only been one market of note or of size around the entire world that's done consistently well over the last 15 years. But the idea of having an equity portfolio that was 95 to 100% US equities, prior to 2007, that was not a good idea, right? Like you especially since the 80s when you had, modern portfolio theory come into play. But, when we were building portfolios in the, late 90s, early 2000s, mid 2000s, you always had an allocation to international and emerging markets. And you've just seen that completely move away. And I don't think that this is a controversial or a risky or any type of statement. That I think that, the analogy I've used, they don't ring a bell at the top. And we just broke 2 all-time highs. So I'm not saying it's the top. But what I do think is, and I continue to think that if we're looking out at any extended runway, and it can be whether you're just looking at valuations, you can look at it, valuations as it relates to historical growth, all those different things. I think that when you see, additional momentum come into US equities and the same old crew is rallying, I think each one of those opportunities provides you with the opportunity to level out your exposure and have a more broad-based approach and pull some profits from this US. And look, the vast majority, especially for retail traders out there, the vast majority of them, when we look at the stocks that are going to make up the majority of their positions, the vast majority of their portfolios are way overvalued, right? They are concentrated in the richest names. So again, not telling you to fire sale them, but I think every time you see a resurgence in US equities, it's an opportunity to take a few chips off the table and kind of spread them around. Would you agree with that?
On like a longer term time frame, yes. More tactical, I do have concerns that we're going to get dollar and US rally versus rest of the world here for a little bit. But
yep.
I mean, you zoom out on that US versus rest of the world chart, and it's still, that still makes sense on that chart for sure. One thing I want to mention today, if you go back to, now that we're at an all-time high, if you go back, you remember I was highlighting that Zweig breadth thrust. And this is when everyone was sure it was a bear market rally. Like, we're not going anywhere near the highs this year. We're going to retest the lows. That was like the narrative du jour. And I remember saying, like, man, I don't know. I don't feel super bullish, but man, these Zweig breadth thrusts, their track record is so good. And the last time I doubted one, we did rip. And so sure enough, that thing remains just a really, really good technical symbol and a signal. And everyone made fun of it when it triggered, and I was like, yeah, y'all make fun of it all you want. Like, probably should buy some calls. So
it's well, and to be fair, and you get the lion's share of the credit for this one too, is that, I think that we've had multiple good moves and trades this year, but I think that that's kind of been a key one for us, right? Right. Shortly after that happened, we added more exposure to US tech, and that's been the right play.
Yeah, the NVIDIA edition this year has done a lot of heavy lifting for us, I think. So
yeah, and it was one of the advantages to getting that. I'm actually surprised. I remember being surprised at the time that we were able to get it where we got it. And it wasn't cheap, but on a forward earnings basis, I think when we bought it, I think they were like at a forward earning. There's like 21 times forward earnings next year.
You were getting close to 20 flat, and I remember thinking, like, this is cheap to me.
Yeah,
for NVIDIA, that's cheap. Like, for a grocery store or something, maybe not. But well, depends on which grocery store, I suppose. But
right, depends. Yeah, if it's Costco, there is no price too big, right?
I think you could argue one of the one of the only mistakes we made maybe is just not doing a little bit more of like, all right, what else is out there that we can put a tight stop on in Techville and to let it ride. But you know, at least we did some. It's
I
not
mean,
in
the
our
flip
nature to do it
side,
to begin with.
the flip side is we did add Snap yesterday, and you added Nike like 10 days ago. So, you know, there's some other things that have gone. I mean, you know, like we were laughing. I mean, you and I have talked about Snap for a little while, but you know, I was just saying to you before we came on the air, was there any news, or did we just get really lucky on the timing of that?
Yeah, that was just luck.
The one thing I will say to you, and you and I were talking about this offline last night, and it's something that I thought the minute that the Truce deals with Gaza came in. Look, I think that the run up in gold has very little to do. I think that the geopolitical winds that have been blowing have helped gold 100%.
Sure.
But because it's gold, my thought was the story behind gold, in my opinion, the 85-90% of the story is just central banks buying. Okay. Nothing has happened that impacts that. Central banks aren't going to quit buying gold because there's peace between Gaza and or the Palestinians and Israelis. They're not going to quit buying gold because we get a deal between Israel and Iran. But here's the deal: in this market, when those things happen, this market is still, like Chase and I have been talking about, this market is looking for an excuse to sell anything and buy US tech, right? So like if you see any kind of thing that people could be like, oh yeah, well, you know, the reason gold's up is because all these geopolitical fears. That's complete nonsense. But if you hear people saying that and fade gold because of it, there's just enough people out there that will do that. And I think it has to do with the performance of gold and gold miners for a really long period of time. And like I said, the other thing is as an asset manager around the world, if, you know, the thing you are the most afraid of is being loaded up on something like gold and watching it get smacked for 15 or 20% while the Q's rip for another 20% higher. Right? That's just, it's professional death.
And you know, we are under the 50-day for the first time since, I mean, you got to go back to like January 6th, roughly. So, you know, like a lot of that amazing momentum is clearly starting to fizzle a bit here. So yeah, I think you're right. Like the fast money people control the price on the margins and they control it short term, you know, quarter at a time. Like, you know, just the random Joes that getting it out of the futures market and everything can absolutely move the price. But I think you're right. Like as long as the big things are there, like it's going to be fine. But as I pointed out too, you know, a little bit in the last few months, like priced in global M2, which may or may not be a great way to look at it. It's at least one way. Like you're not super cheap anymore.
No,
but I saw where I think it was Michael Howell he created a chart that showed the gold price basically in global liquidity terms. And it looked, you basically had this big channel for all of it, you know, the last 50 years or whatever. And that channel suggests you get to about 4,500. And then that at about 4,500, that's the area where you're like, this is pretty fairly, if not overly valued. So in the back of my mind, like, I'm like, are we done? No, I think that 4,500 area is a good proxy. But you know, we've talked plenty about like, got to retest 3,000 ish, you know, whether that's 32 or 28 or whatever, who knows? But like, it feels like you got to get back down there to kind of clean this thing out. And that suddenly looks possible now that you're you're the lowest you've been since basically May 19th.
Yeah. You know, again, take this with a grain of salt. The one thing I can say is that I've spent a lot of time watching gold miners and gold mines. So I do have a pretty good feel on how it moves. You know, like I've said, I just, due to that history of watching it move, I've long thought you get to 3,500, you've got to retest 3,000 at some point. And, you know, again, I am not playing this tactically according to these levels that I'm about to throw out. So nobody else should too. This is not a recommendation to short. It's not a recommendation to go long. Okay. But I've just long looked at it and been like, yes, I see it retesting 3,000 again, due to recent memory and the way things have played out for so long. I'd expect it once it hits 3,000 to get oversold some more. I've seen kind of that level of 2,750 to 2,850 being an area that I thought before we go make a new high above 3,500, I just see us retesting that level. And one of the reasons that I see us retesting that level is we topped out right around 35. Did we hit 36 in this move, or did we top out right at 35? I mean, if you look at it over time, 35 is effectively the top. You're muted.
Yeah, front month futures, we got to 35, not 36.
Okay. So every significant bull market for gold in the past, you've seen 15 to 20% retracements of the price, right? If you retrace 20% from 3,500, that takes you right to 2,800, right on the number. Right. Yep. And I just, again, the other thing I looked at it, and you and I were talking about yesterday, when you're this close to a new all-time high, especially when we've caught as much of the run of this as we have, my attitude is, hey, let's get a little more defensive here. If we're wrong and it breaks out to a new all-time high, we still hold on to our core positions, and then we could put a little bit more on at that point. But, that level for us, that's, we're only about, 3, 4, 5% away from that level. So you're not really giving up a lot. But I would say this, if you haven't gotten into gold or gold miners yet, I think you're probably going to get an opportunity to do that. I would do it gradually here, because I think I'll be surprised if you don't see some more pressure there. That being said, I do think that the stage is set for gold. So one of the things that I think you need to be cautious of is, especially now that you're getting positive news coming out of the Middle East, I think that your headline risk kind of flips the other side now. I think it's to the upside, meaning I think if you start thinking about possible headlines that come out, I think the preponderance of those headlines would be more than likely to create a really nasty, violent up move for gold as opposed to down. But, if one of those headlines doesn't come along, again, and if tech's ripping, and if Qs are at new all-time highs, I would not at all be surprised in that environment to see gold plumb some depths here and take a peak below 3,000.
Yeah, I really struggle with it, both fundamentally and the chart. Because when I look at the chart, like you could have a great day on like Monday, and now it looks like it's breaking out. Like it looks like it could break down or break out from this exact spot. So that makes me kind of feel like I could go either way. But that close below the 50-day for the first time, since the year was brand new, that does feel a little short-term concerning for sure.
Well, and the other part of it is you have not blown out the short dollar trade either, right? Like I want to see some chatter around social media about people getting freaked out about the DXY going to 108. You know what I mean? Like, in order for me to think you've kind of smoked out some of that dollar bearishness. Yeah, right. But you know what I mean? I want to see some fear about the dollar to the upside before I'd feel really comfortable or feel really confident that downward push on the dollar is going to continue. Now, the one thing I will say, though, is that the more and more I listen to Trump and watch the administration, I personally think, and I'm reading some tea leaves here, I personally think a lower dollar is a part of their policy, at least internally.
Yeah, I think they want it, and for good reason. I think it's very helpful. And I think they're going to get it on a more secular basis. But I do think I wish I could had some sort of feel for how long and how high we retrace. But I mean, I guess it mostly comes down to how inflationary will some of these prints be because of tariffs for the next year. Because after that, the base effect's kind of muted out. But that really is what will depend. Make or break the whole thing. But what I will say is, like, I'm getting bullish but for a bounce, and I have no idea if it's going to be a 10% retest or a 90% retest. But one thing that makes me feel like it's definitely coming.
Bullish for a bounce in what? The dollar, right?
Yeah, yeah.
Dollar. Yeah.
One of the things that makes me feel like it's definitely coming is, as I've talked about this, all of my research clients are pushing back hard, and let me tell you, the hit rate whenever the clients push back hard is very good. So,
well, that reminds me of, it was probably about a month and a half ago, where we had several clients calling in, getting really, really concerned. And this is not a knock on any of them if you're listening too. It's not a knock, just you manage other people's money long enough and you see these things. And you and I are kind of looking around going, boy, based on how we're positioned, we feel pretty bullish. And I remember that conversation we had where I was like, you know what, man, this usually, as a matter of fact, I can't think of another time where this doesn't portend well. Usually when the clients are getting a little restless and getting a little bit freaked out, that's almost right before we have our rips. And I mean, I think we went straight up like 11% since that day.
Yeah.
You know, and you know, another good lesson about why you don't try to time markets for simply timing's sake. You know, I think you definitely look at markets and allow what the market is doing to kind of influence how aggressively you're positioned and where you're positioned. But, you know, I think one of the biggest mistakes, and I can't hammer this home enough, you know, I think about it internally. You and I never sit there and have those discussions about, well, I think the market's going to tick down. You know what I mean? Like we look at overall macro conditions and things like that, but you know, we're not timing markets. We're not sitting there going, I mean, I guess we are in a certain way, but if you're sitting there going, oh, I got a bad feeling about this, the market go up, the market go down, you got to learn that situation that you think can drive the market up or down, that's one input. And there's a lot of other inputs that can override it. Right. And
the way
I think that's probably,
sorry, you move the throttle up and down, but you don't like turn the engine off or
right.
or floor it, you know, but it's there to be throttled up and down. I mean, back in April, there was a point right after the reciprocal tariffs hit where I was as bearish as I probably will ever be. And it's not like I was like, we should be 100% cash or like we should be like 30%, you know, just like crazy hedges. Like it just, you know, this is not how this whole thing works.
No. And you just never know how things are going to play out either. And, you know, I think one of the things that you either learn in a short period of time doing this, or you get your head pounded over an extended period of time if you don't learn that lesson. And that is that A, you cannot just time markets for market's sake, but B, I can't remember what one of our buddies said this, but and I don't know if you know who this came from, but I thought he put it the best, which is, look, we you know, investing is a journey and we should never stop on that journey, but the markets are like the highway you're driving on. When it's 85 degrees out and it's 4 p.m. and it's just beautiful, you can drive faster, right? And it's not dangerous. Yet at the same time, if you're going through those high mountain highways and you know it's 15 degrees out and the wind is blowing and it's dark, you're going to drive slower, right? You're going to have less risk exposure, but you keep moving forward. And the reason you keep moving forward is you just, you know, you never know the way these things are going to play out. And you can't just time markets for market's sake. I don't know anybody that's made any good money doing that. You got to manage the risk, but don't be one of those one decision investors, right? I think the S&P is going to go, you know what I mean? It's a fool's errand.
Yeah. The light switch, all in, all out stuff that's for social media, you know, posts that you can delete later. That's not for real life.
Anyway, you got anything else, man, you want to add before we close this thing down?
Nope. I think that about does it. Next week we'll have ISM. It'll be jobs week. We'll have construction spending. So we'll have JOLTS and ADP, and then obviously the non-farm payroll come out next week. So relatively important week of data. Let's see. And so last month we added 139,000 jobs, and this month the guess is 110. So the guess itself is a little bit weak. So we'll see how it goes.
All righty. Well, all right, you guys have a wonderful weekend. As always, catch us on social media. You can get the video feeds on YouTube. Just search Know Your Risk Podcast. Until Monday, we'll see you then. Have a wonderful weekend. You're listening to the Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
And we are back. It's the Big Friday show. So kind of kind of bringing back the tradition of how Know Your Risk Radio got started. Obviously, no radio anymore. And for those of you wondering, some regulatory challenges. We may get on, we may do the radio again, but due to the cost and the regulatory challenges, it just didn't make sense. So, it has to do with an SEC marketing rule that was passed, and the way it's been relayed to me is it's kind of a landmine, meaning it's not so much you can say this and you can't say that. It's kind of going through it. What our lawyers were explaining is it's ambiguous, and that's kind of the scariest of all things, right? So hopefully those things get refined. Maybe that rule gets changed or worked with or whatever. But long story short, had some complaints about, not doing the weekly show anymore. So I just thought, well, there's no point in not doing it. Chase obviously joined the earlier segment with me, and we'll kind of do that. We'll do a week in review section with both he and I, and I'll kind of do my separate section. And one of the, we like to talk about, investment opportunities, general retirement planning, things like that. And again, it goes along with the rest of our show, which is, if you're a client, gives you more insight into what we're currently doing and what we're thinking. But there's also actionable things that you can be doing on your own. A couple notes along that line. And if you're a client of ours, we're getting some information together. I'm going to send this out to you. But it's something that I have known, and it's one of those things that we don't talk about enough because you're close to it. One of my clients brought it up, and I told him that, I wasn't aware of this. And then I remembered, I remember this. It kind of loses you sometimes. Anyway, but quick note along, and again, perfect example of anybody being able to use this information. If you have a home and you are over the age of 61, okay, what you need to do is you need to go contact your county. Now, rules are different, and I'm not sure what the limits are, but you need to contact your county, and you need to at least try to fill out a form where they're going to ask you for financial information, and you submit it. And if you qualify, they will lower your property payment. One of my clients got his property taxes lowered by 75%. You got to be over the age of 61, got to own a home, obviously. But 75% reduction. Now, again, not everybody's going to get that 75% reduction. It varies from state to state. Could even vary from county to county. But definitely, that is definitely something you want to look into. Again, if you're a Bulwark client, we're going to talk about this in our upcoming town hall, or maybe I'm going to send it out anyway, it's coming to you. More information is coming to you on that. And I realize that we haven't addressed that enough. But other thing I want to talk about today is something that I've been referring to as the great misconception. And I think that there are a whole host of reasons for this misconception. But I think at the base of it, it is something that is a misconception, I think, to people on both sides of the political aisle. I think it is something that's delicate that shouldn't be taken advantage of. But it's something that you need to be conscious of nonetheless. And when I say you, what I'm referring to are people that set policy in this country, whether it's economic policy, whether it's legislation, whatever the case may be. And one of the things that you're finding out, and I couldn't help. Now, I want everybody to understand something. This is not a political statement one way or the other. This is purely an observation from looking from the outside. Now, let's think back to 2016, when Trump first got elected into office. And there's literally been too many of these episodes to count. But think of all the times that he has either done or proposed doing something that is at the very least considered, non-normal, right? Outside the norm, outside the normal MO of the government, outside the normal, operating procedures of a U.S. president. And think about how many times he's had unconventional economic ideas, policies, and think about how many times we've listened to prognosticators talk about what a disaster these things would be. Now, again, I am not making a political statement because I want everybody to understand this. This isn't a setup for me to tell you that I think Donald Trump is the Nostradamus of our times and that he can't make any mistakes. That's not what this is about. What this is about, in my opinion, are a couple things. I think, first of all, culturally, we in the United States have kind of lost track of who we are. And I think there's a whole host of reasons for that. I think, the internet, social media is a big part of it, right? It kind of brings the world together, makes the world much smaller for sure. And so by its very definition, I think that the world via the internet and social media has become more of a one world environment, right? A little less regional, right? And certainly didn't fix, all the problems around the world, but right, it's certainly flattened the world to a certain degree. And when you're negotiating economic policy, when you're negotiating trade policies, there is certainly a way in which we go about doing those things. There is an accepted manner in which we go about doing things. But I think that it's fair to shine the light on the way that we go about doing things, the status quo, and observe how it's worked, especially for us here in the United States. Meaning, I think that we can all accept the idea that, for instance, if we go back and look at NAFTA when it was enacted in the 90s, it has not played out the way that we hoped it would. And I think there were plenty of really smart people that forecast that. I think there were other people. Now, I was only 12 years old at the time, but it kind of tells you what a finance nerd I was. I remember very specifically having a conversation with my dad because I remember listening to Ross Perot's critique of NAFTA and thinking a lot of what he said was really smart. At the same time, I was a free markets guy. And if you guys wonder, hey, Zach, you were 12. How could you have been anything? I was a bizarre kid, man. I don't know why, but politics and finance have just always been very interesting to me. People used to jokingly refer to me as Alex P. Keaton all the time. Like the kid that walks in, attacking, liberal, socialist economic policies and referring to Ronald Reagan as Uncle Ronnie. So I was very much that Alex P. Keaton guy. But I remember it being very torn, right? Like, wait a second, I believe in free markets. That's America. That's capitalism. I'm going to trust the free market to work it out. And then hearing a guy like Ross Perot, an accomplished businessman, common sense, certainly more common sense than and experience, miles more than any other politician that he was speaking to at that time or that he was debating with at that time. And I remember being really confused. And it has taught me a really, really powerful lesson. And many other things have reinforced that lesson. But what is that lesson? That lesson is regardless to what ideology that you subscribe to, regardless of what political party that you consider yourself a part of, or that you just have the most in common with, or maybe that you find the least egregious, whatever the case may be. Do not let that association or those commonalities or those common interests, do not let it whitewash the way you see the world. Do not let it influence the way you view everything. Do not let it become a lens in which to see the world through. And why is that? Well, A, you hand over your autonomy and your agency, but B, you also quit thinking for yourself. And I think that you can see a track record. Now, there's plenty of good reasons for this track record, but what I'm all getting to is this over timid foreign relations stance. Now, bear with me. I am not sitting here saying Trump is over timid by any stretch of the imagination. I'm also not saying belligerence is the key to figuring out geopolitical situations. Okay, I'm not saying that. What I do think is important, though, when you go into any negotiation, and I think one of the most important things, I know, going into any negotiation is to have a very good understanding of who's who, right? Who's sitting in what position? Who has the advantages? What are they? Who's got more leverage? What is the scenario? I especially think it's important to do that when you're the guy at the top of the heap. Now that sounds a little bit bizarre, right? Because history is colored and told and written by the guy at the top of the heap that kind of executed dictatorial powers. And when I say guy, I mean country, right? It's the old adage, history is written by the victors, which I think is largely impossible to argue with. But I think that it is absolutely necessary to know the playing field, to know the players, to know their aims, to know their strong points, their advantages, their weaknesses, their vulnerabilities. And not just so you can take advantage of them. It's quite the opposite, especially if you're America. It's so they don't take advantage of you. And I think all too often and for all the right reasons, we've approached things being concerned about being the cowboy, and rightfully so. I'd point to the Iraq War in the early 2000s, right? I think it's very fair to make to have an assessment or make the argument that we were overconfident, that we were belligerent. It's kind of the worst of American foreign policy. So there's certainly examples of that, but we also need to sit back and acknowledge the history of America. And what is that? We are the first and only military, economic, and political superpower. I mean, first and foremost, very few civilizations or countries have ever dominated in terms of that power and the ability to project that power. Very few civilizations on the face of the earth have ever reached the heights of America. What is unique about America? Now, again, we can point to exceptions. We can talk about how we've meddled in foreign elections, how we've even tipped foreign elections. We've done horrible things. There's no question about that. Every country has. But by and large, one of the most unique aspects of the great American experiment is that we were able to reach the levels of prosperity and technological advancement and democracy, quite honestly, without politically enslaving other people, without establishing colonies all over the world, without people having to be underneath our thumb per se. Now, did we have influence? Sure. But we need to give ourselves some credit. We have been by far the most benevolent superpower that the world has ever known. And that's a fact. Does not absolve us from the crimes that we've committed. Doesn't absolve us from the mistakes we've made. But all of this I mean to point to is, well, what is this great misconception? One of the biggest great misconception, or the great misconception I'm talking about is this insistence, especially coming from the left. And I think there's obviously several reasons for that. And I think one of the most obvious reasons has become this whole America is the axis of evil around the world. America is the postcard of oppression around the world, right? I remember people back as early as the late 90s saying there's the hate America crowd. And it was much more veiled at that point. And I wouldn't even say it was necessarily veiled. The ideology hadn't gotten that extreme at that point, right? It just kept progressing. And at that point it was, hey, we can be wrong. It's so weird how you look back in time, because I think back in time, you know, and I think about my ideals now and what I think right now. And it's really odd because there's so many of the things that I used to think, that I used to disagree with quote unquote Democrats about, back in the 80s and early 90s, where I look back on that and I'm like, you know what? I actually kind of agree with that position now. But you could see how that what I think started off good and healthy, which is that we can be wrong and we can be the perpetrator of wrong things. I think the pendulum once again has swung too far. And it's created another misconception in the world. And I think it kind of coincides with Trump derangement syndrome, meaning think about how many times what he has proposed economically, militarily, but let's focus on economics and finance right now. Think of how many things that he has talked about. This is going to be a disaster. Oh, this is going to be horrible. Oh, this is going to be. And what made me think about that was some of the hand wringing going on around these trade deals. We don't have any trade deals established yet. Right? We're not, we haven't accomplished anything, which is true on the face of it. But one of the things that I think people forget is that the vast majority of countries out there, it doesn't work if they don't have trade deals with us. They don't have access to our markets. Now, does that mean that we put them over a barrel and take advantage of them? No. And I think there's plenty of examples of us doing that and having it not be good. Now, this isn't a perfect example, but I would point to Russia right after the fall of the Berlin Wall, right? When Russia fell down. Excuse me, not when Russia fell down, when the Soviet Union collapsed. And I think you can go back and look at that, and I think we made some big mistakes. And I think one of the biggest mistakes is not giving assistance and aid to them, not stepping in and helping them safeguard the possessions and property of their citizens so that they could rebound quickly, stepping in and adding stability. And what's funny is we have a history of it. Go back and look at the 1920s, the Great Famine in Russia. The country that saved more Russian people in that than any other country involved was the United States. Sent massive amounts, millions of pounds of food. And we should have done that, right? That's America at its best. But like anything else, it could be taken too far. And I haven't been able to shake this, listening to so much critique. Now, again, I'm not claiming victory either, okay? We still do. We don't have the trade deals done. We don't have them completed. But I just think I cannot help myself but to think that there's a lot of unneeded hand-wringing. And why do I say that? I say that because, like I just previously said, the vast majority of countries out there don't have a choice. And again, we can't take advantage of them, but we need to know that. It needs to be something that's put into our, right, something that is factored into our public policy, something that's factored into these trade agreements. Meaning I think that you can make a really strong argument that in a lot of ways we've paid too much deference, and maybe not in trade deals. Maybe it's just been that we've ignored things for too long. That's entirely look, I'm not an expert on all the trade deals that we've ever cut. But you're not doing yourselves any good when you walk in there and pretending like you punch below your weight. Oh, we're going to make everybody upset. We're not going to have any trade deals. You look at them and go, guys, how many countries around the world's economies do you think are going to function normally or in a healthy manner if they don't have access to the U.S. consumer? I mean, come on. Well, Trump's going to do, look, that's one thing that I can't shout back. Is it possible that Trump is a sociopath and is, looking to blow up every single trade? It is possible. I would just say that his past doesn't show that. His past says that he comes off pretty hot, pretty hard, but usually ends up coming to very acceptable resolutions. Now, again, I'm not claiming victory. Like I said, there's a lot of work left to be done. But it is an example to me of this internal, it's so much better. We're cooperating with the rest of the world. And good, look, sometimes it is. But if you think that that's always the right answer, I'd ask you to go look at the last 25 to 30 years of European economic policy. There's plenty of times when we should be pivoting away from them. They've been a disaster. So I don't think this idea that you're right if you're in lockstep with the rest of the world, I don't think it holds water. I think it's much more nuanced than that. I think it's much more complicated than that. And I think it leads us down a wrong path. And I think that anytime you're not seeing the board clearly, meaning like it's you ever been in those scenarios where people like they've got fake humility, right? It doesn't help. Like, yeah, dude, just admit it, right? You're a really good stick in golfing terms, right? Just admit it. You don't need to sit there and, just admit it. My wife was telling me about that. It was something for whatever reason, I have a very, very, very hard time. I get horrifically, and it's not because I don't think I'm capable. I have a plenty healthy view of myself, I can assure you. I don't think I'm an egotistical person, but I think I've got a very healthy view of myself. But I hate compliments. They just make me extraordinarily uncomfortable. I don't know what to say. It just makes me squirm. And it's not because I don't feel validated. It's not because I don't feel worthy. It just geeks me out. But when it does that, I remember my wife looking at me and going, honey, just say thank you. Right? But my whole point is not seeing the forest for the trees is never a help. Not to you, not to the people that you're dealing with, not with the people you're negotiating with. And you just can't help but to see how many times have we been on the edge of economic Armageddon and Trump was about ready to drive the thing over the cliff. And he hasn't, not even close. And I'm not saying that that's all that we should give him a bunch of credit for that. What I'm saying, there's a big part of that just has to do with the way the board is set up, meaning it takes two to tango. For the thing to go over the cliff, the other country has to, flip you the bird and say, we're done with you. And again, we can't take advantage of that position, but it's very odd to me, the way that so many inside of this country view ourselves. And I just think we see ourselves as far more impotent than we are, with far less leverage than we have. And I think the other thing is that we doubt our own intentions too much, especially when it comes to the rest of the world. And I'll just say this, maybe this makes me sound home country biased, which I'm sure I am to a certain degree. But a perfect example of this was if you had to pick one country in the world to architect a global framework for global and international trade, you had to pick one. Which country do you think would draft one that was the most equitable and the most fair to everybody involved? I think without a question, it's the United States. Doesn't mean to be perfect. Doesn't mean there wouldn't be things that need to be ratified. But I think it's okay to sit back and say we're pretty good. I think it's okay to sit back and focus on the things that we've done right as a country, and also to know where we're at and to realize, hey guys, sometimes it's okay to drop the hammer. Sometimes it's okay to be a little bit of the bull in the china closet and say, hey guys, things have gotten out of balance. We need to redo this. And I'm not saying I know for 100% sure that's what Trump's currently doing. I think he is. But there's also no evidence that he's blowing up the entire world and, that it's as bad as, like I said, you've got to look at the chain of events, right? How many times guy's been president for about 4.5 years, if we add the first term in, right? How many times are we on the precipice of Trump's going to blow it all up? Trump's going to screw up the world. And it hasn't happened. That doesn't mean he's infallible. I'm just saying we need to start. Then there are even people that I think that are traditionally more sympathetic to his take and his angle on things, that they'll do it. Or they'll, in my opinion, over-rationalize the opposition view. And I think one of the reasons they do it is because if you're an intellectual, generally speaking, I think it's really hard to be an intellectual and come out and say only nice things about Trump. It's just frowned upon, right? And I'm not saying he should only have nice things said about him. I hope everybody understands what I'm saying here. I also think that there are so many people looking through the framework. I heard a really intelligent guy recently talking about the Supreme Court justices and how he respected all their views. And it was kind of shocking to me because, first of all, I think the judicial system is the part of our country that the branch of our country that I respect the most. And I think it's something that is incredibly unique about us. And I think it's something that we do that's not perfect, but I think we do it very well. But I think, when you look at some of the decisions and the explanation of some of those decisions, or some of the dissents that a few of the members on the Supreme Court have kicked out, I'm not a legal expert, and so I will yield to them, but it's been very hard for me to sort through some of those dissents and read them and go, how does that make any sense? And there was a recent one where Amy Coney Barrett, Coney Barrett, had a critique of Ketanji Jackson, and it was pretty hard, but I thought the logic was just really hard to argue with. And then I heard this guy come out and kind of like defend it. And I was sitting there going, that's really peculiar. Because I mean, I've lit up, I think, almost every judge on the judiciary at some point. I've got disagreements with the conservative judges. I've got disagreement with the liberal judges. Not that I think they're stupid or anti-American or anything like that. But anyway, my point is that I think that there is this, we always talk about do not let your politics get in the way of your investing. And I think so many people are doing that. I think so many people look at a situation and the fact that Trump is the one leading us during this situation. And because of that, the assumption is it's got to be a disaster, right? Everything he touches is going to be a disaster. And it's just not the case. And one of the reasons it's not the case is not just because of Donald Trump, it's because of who we are. Meaning, it's like people forget, oh, Donald Trump's going to make them mad and then we're not going to have a trade deal. It's like, it's the real world, guys. It doesn't work that way. And that's not necessarily affirming to Donald Trump. Right? Like, I'm not sitting there saying that Donald Trump's going to figure it out. I'm saying that one of the big chips he's got in his favor is that this is the United States. That they need us more than we need them. Again, doesn't mean we should abuse that. Don't want to do that. Hasn't turned out well for us in the past. But if you want to get this investment picture figured out, if you want to have success, you cannot subscribe to that. You can't. I don't care what your political affiliation is. If you ascribe to that, if you ascribe to that idea that Donald Trump's going to blow up the world, he's going to screw everything up, everything's going to hell in a handbasket, There are plenty of people on the right that said that through 8 years of Obama and said it through 4 years of Biden. They were wrong too. So you've got to be conscious of your own bias, and especially as it relates to Trump, whether you like him or not. When we're looking at it from an investment angle, you cannot let yourself get drugged down that hole of, oh, he's going to blow everything up. Oh, it's going to be horrible. It hasn't yet. It hasn't yet. And quite honestly, if we're being honest, the guy has generated several results that everybody said he wouldn't be able to generate. Again, don't think the action, oh, Trump's in office, everything's great, buy as much stock as you can get. I don't think that's the right attitude either. There's a middle ground. And that's where we're always trying to get, right? It does not help us to get caught up in the ideology and the whims of it. And, oh, it's going to be so bad. Or, oh, it can't fail, right? There's middle ground. We got to use our brains, especially in these markets, especially with as many things that are changing. So anyway, those are my thoughts for the weekend. I appreciate you guys listening. As always, join us on all the social media platforms, Twitter. We're on YouTube. Just search for Know Your Risk Podcast. Got another great interview coming up next week you're not going to want to miss. Until then, we'll see you next week. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.